Welcome to our BRI Investor Survey evaluation. We'll focus on one of the defining topics of the financial industry, ESG. First, are German institutional investors pursuing an ESG strategy with their investments? The answer is yes. Last year, 68% of our survey participants pursued an ESG strategy. This year, the number has further risen by 1.7 percentage points, meaning that roughly 70% of German institutional investors follow an ESG strategy. However, 16.2% do not pursue but plan to do so in the future. Only 14.1% of the investors do not and are not planning to pursue an ESG strategy. As you can see, we can put this in contrast to whether an ESG strategy is costing returns or not. The results of this question are astounding. 29.3% of the investors say yes, an ESG strategy costs returns. But only 14.1% do not pursue an ESG strategy and are not planning to change that. The question is why? Why should an investor follow a strategy which costs him returns? ESG seems to have other benefits than returns. Which brings us to our next question, why ESG? As you can see, we define some possible answers such as higher risk-adjusted returns or media pressure. You can also see that investors and asset managers follow other reasons for pursuing an ESG strategy. Our just mentioned sample answers, higher risk-adjusted returns and media pressure, have zero impact on both to pursue this strategy. Expectations of investors and intrinsic interests seems to have the most significant influence on an asset manager to follow an ESG strategy. Intrinsic interests and the avoidance of reputational risks and risk management seems to be the three main reasons for an investor to pursue an ESG strategy. However, there are many strategies an investor or an asset manager can follow, and they are very different. So next, we ask the survey participants which ESG strategies they are following. Exclusion criteria, a relatively straightforward strategy to follow, is the favorite ESG strategy for investors and asset managers. But what's interesting, impact investing and sustainable thematic investments currently are more favored by asset managers than investors. This could indicate that asset managers are launching impact thematic products which are likely to be in greater demand from investors. It is clear that there are costs associated with a transformation, and this also implies for ESG compliant investments. For which measures and analysis during your sustainability strategy did your company spend resources last year? Therefore, we ask asset managers and investors for which measurements and studies in the course of their sustainability strategy their company spent resources. 71% rely on ESG ratings and data providers, and 61% do internal ESG-related analysis, which is associated with higher costs such as personal expenses. In recent years, the importance of infrastructure investments, regardless of debt or equity, increased significantly due to its critical role in mastering ESG conformity. Infrastructure investments are well established in the portfolio of institutional investors. Low demand elasticity and typical free floats are welcomed yield drivers in times of high volatility. Of particular interest are infrastructure investments in renewable energies, especially in times of energy shortage. The challenge is that renewable energies is a still huge and growing sector, which can include techniques such as carbon capture, energy storage, geothermal energy, or wind power. getting an overview over what is possible can be very difficult. More so if you are also including financial returns and not only technical possibility and economic needs. So, we ask asset managers and investors to specify their infrastructure investments in renewable energies. With over 80%, wind power and photovoltaics are the most invested renewable energies, closely followed by hydropower with over 60%. That is not a big surprise. The EU, and especially Germany, is forced to increase their energy transition away from Russian gas towards renewable energies. This transition is extremely costly, and the most important source of financing are institutional investors and the private markets. In conclusion, ESG is gaining more and more importance on the political, social, economic and financial level. But there are also big obstacles to overcome. At some point, standardization and a coherent framework will be necessary to allow for meaningful analysis and comparability. Then we can start making performance assessments that apply some attribution analysis to ESG standards and allow for investment decision making.